Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 19th of June. All right, now as I take you into the MyFX Trading Hub, just to have a look what's going on and where the action's going to be today. Now, just starting with the market conditions. Now, I'm not trying to sort of scare anyone, but usually with the FOMC, there's very low liquidity and high volatility around these releases. Okay, this is going to be the core fundamental event that the whole market globally will be watching. We've got all day to wait. The majors usually trade sideways into these releases. So just expect that at the time of the release. And then afterwards, that's when the sunshine comes out and hopefully we've got clear trending markets. Core market drivers, well, at this point, hopefully it is the Fed listed here tomorrow if they give us some clear direction. But the core market drivers just at the moment, Brexit and the China-US trade situation. Now, there were quite a few developments yesterday, especially with Draghi coming out and really formalising the need for further action to stimulate growth in Europe, right? So that saw Euro tumble down about sort of 60 points. It bounced back 40 and then back down again. So it's all over the place, wondering what the next step is. Now, if I just go through the overall currencies here, the main thing we're looking for today, now we've got a couple of big releases, the UK CPI. Now, sterling is caught up in Brexit. Boris Johnson, the guy leading the PM race at the moment, bit of a negative because he's such a Brexiteer. But sterling is coming back a bit. You know, the market's a little bit volatile. Will this impact? I don't know. Actually, to be honest, I don't know. It's almost Brexit is too big a noise at this stage. I think the CPI data will be pushed aside unless it's with the current momentum, which you'll probably have to wait for that release to come out or before that release to gauge that and see what sort of variance there is. Now, the Canadian CPI data, this is obviously very important for future rate expectations from the Bank of Canada. This is a very important release, and I think it could be used best as a trading instrument. Now, what I mean by that is we do have very clear and fresh sentiment from the ECB and the RBA in particular. So I'm thinking maybe Euro CAD and Aussie CAD could be potential there, especially on strong data. I'll be updating the analyst picks after this recording is done, just to show you what I mean by that. So we've got the Canadian CPI figures, but the market will definitely be focusing very heavily on the FOMC. Now, don't forget, there's a good 5.5 hours after the Canadian CPI data before we get the releases from the Fed. So plenty of time for dollar CAD to move around in the meantime. Now, so what's it all about? Well, what we're looking for is central bank sentiment, and we're looking for central bank sentiment from the US dollar. Now, we've got a couple of situations here where this could really come into play for us. Obviously, having fresh downside momentum in the Aussie and in Euro. Now, those two pairs are waiting for this release to work out whether they're going to keep going down or not. To me, if the Fed remains on hold and there's no dovish comments, that's dollar strength, and we should see Euro and Aussie move to the downside, and we should see the dollar index move to the top side. Now, the best dollar pair for my liking, and it's just sort of come into play over the last 24 hours, is dollar Swiss. The hourly charts have broken higher. The daily charts have broken higher. It's a long way before the weekly charts go higher, but having these two charts alone going topside, if we get upside sentiment from the Fed, well, that'll be the same as getting upside momentum there on the dollar Swiss, and we should see a nice move on dollar Swiss to the top side. All right. Now, in saying that, the hourly charts, dollar CAD is moving up at the moment, but only on the hourly charts. There's a fair bit of noise involved there. It's trading a big range, so don't get sort of caught into that up move. In fact, I wouldn't be surprised to see a breakdown through short-term hourly support at this stage. Now, I'll just give you a quick look at the I'll just give you a quick look at the news. Just be aware, also, pushing the Aussie higher against that overall fundamental sentiment is news that, once again, Trump and China, or US and China, rekindled trade talks. This has put a bit of positive spin on the yuan, which also pushes up the Aussie and Kiwi. So if you're wondering why they're higher, this is the main catalyst for those two currency pairs to be higher. All right, so obviously most of the news will be about Draghi, bit of the negative sentiment there on Euro, but all markets waiting for the the Fed to come out and give us their bits and pieces. And how's this? I mean, this is the weird thing, right? Trump is putting pressure on the Fed, like saying, let's see what he does. Basically, if he doesn't come out and say they're going to cut rates or get dovish, he's thinking about replacing Jerome Powell. This would be unprecedented and an absolute catastrophe for the dollar, I think. So just be aware, just you got to keep an eye on Trump here. I mean, this could be the final thing that Trump does. I mean, he's done a lot of stupid things, but this would be the pinnacle, I think, as far as the markets and stability in the US economy. You take away the guy that is doing the best job I've seen in many, many years, it would be a major hiccup, and we could see the markets go into some sort of unusual volatility. Just to give you a look at the charts, okay? So don't get, when you're looking at the charts here at the moment and you look at the MyFX Trading Hub, yeah, I've got Aussie down. This thing's still going down. This is a very short-term resistance line. Just because it's broken back up above that doesn't mean it's going back up. You know, it gives us opportunities to get short at better levels. Overall, this thing is going down. Obviously, the other side of the picture, the dollar, is the main piece of the puzzle where it will go to next. But overall, the Aussie is going down. Now, if it's not going down against the US dollar, it'll be going down against some of the other pairs that are stable, right? Like, well, not like the euro. It's going to be going down as well. It's hard to say sterling, but Kiwi, the yen, CAD, these sorts of pairs. Now, so I'm just leaving these resistance lines where they are at the moment. There's no need to move them. Looking to sell Aussie and Kiwi higher up. Now, dollar yen, just trading sideways at the moment. Okay, now with that trend line, I will be adjusting that to those recent highs. So if I just bring that across, we've got that trend line above. But basically, it's just a matter of moving that top trend line so you know where the market is focusing right at this point. And that's where we are right there. And you come down to euro. Now, once again, this is the level it's broken down through. If anything, you can get rid of that. I wouldn't be drawing a trend line from this point to the most recent low. That's not support. That's the start of a trend line, but it's not support. Right? Don't get confused. You start drawing trend lines too early, you're going to confuse yourself with what is support and resistance. At this stage, this thing is breaking down, and the next level on the downside is 111, sort of 29.30. Okay. Then you've got sterling. Well, it did break down through here. You can see how it's got like a double bottom. This is going to act as resistance initially. You would expect a couple of stops above 125.80, but once again, Brexit is the key catalyst there. And you can see this short-term hourly chart on dollar CAD. Now, this has got a bit of credibility. Now, I don't mind the idea of getting short dollar CAD here, and this is because if I just change the color of the pen, oil, right, 54.29. See how oil's actually, that's a terrible color. Let me just change that. You've got oil moving down here. It's rallied a couple of bucks. That's going to put downward pressure on dollar CAD. So a break here of this trend line, which has got like 3 touches, it does have credibility. Down through 133.60, we may see a bit of a run down to 20. There's not a lot in it ahead of the Canadian CPI and the Fed releases. But if you're looking for something short term, that's probably one of the ones I would suggest that does have that does look okay. If we didn't have the Canadian CPI and the federal funds rate and statement coming out, I'd be probably woofing into that. But with those major events coming out, I'm probably just going to hold off. So that's where we are, guys. There's a bit in that. This is where you really need to understand what you're doing. And what I say that is how the market works and where the focus changes and what you need to do to avoid events. If you're looking to avoid the FOMC, make sure you're looking at the crosses, right? Anything that doesn't have the US dollar in it, they are fair game. Now, to me, as I said, I'll reiterate, the Euro and Aussie have got fresh downside momentum from their central banks. They should be a focus, okay? They are weak. You're looking for pairs that are neutral to strong to really go with that. You know what? And so you just got to work out where that is, work out where the pressure points are, and that's these extremely high impacting events. And don't forget, liquidity today around the FOMC will be very low, and that creates high volatility. All right? It's going to be an interesting day. Let's see how it turns out. Hopefully the Fed is very defined. Whether the dovish will screw up the trades here on the Aussie and Euro because these pairs will rally because of that US dollar weakness. But if they are neutral, which to me is more like dollar strength, then we could see some good moves here on the Aussie and Euro. And I'd say probably the Kiwi will play catch up as well. All right, guys, that's it from me. Have a good day. We'll see you later on. Cheerio.